Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, we talked yesterday about Celgene. We talked about it a couple of days ago when it came up on our radar screens. You can see here's the M, which is the monthly trade triangle. It came in at 121.47. We shared that with you yesterday in the video. You can see it. I think it's 4 minutes and 40 seconds in. You'll see a thing for Celgene, what we thought would happen. Of course, it happened today. The announcement, they'd made a major acquisition, spending $7.8 billion to buy Receptos, which is a autoimmune drug company working on an MS drug, hopefully. And hopefully it's a drug that works for everybody. So anyway, we thought 136 would be a target zone for it. We actually got to 135.98 today, close enough. I would say probably take some profits, not all of them, because I think the market can still go higher. It's coming from a very strong base. You can see here the base we talked about yesterday, which was the head and shoulders base, the break over the trend line, which is right here, the monthly that kicked in, up to our target zone, over the 50 line. Everything was good for this stock. I expect to see more of a few more days, like starting to level off now, to give the market time to figure out what's going to happen next. But the trend is clearly up in this stock, and it's been that way for quite some time. Let's move on. This is the Dow. It has three things going for it. Really, it's over the parabolic line we talked about. It's over the 50 line. It also is a glimmer of hope that it may be trying to make a turnaround. I think it really has to go over the 18,200 level. And it's about 125 points from there. I think if it closed over there, that would be a very strong sign that, yes, this is going to have another big push up in the marketplace, but it's not there yet. I want to see our monthly and weekly kick in. The first one will be the weekly that kicks in. Pretty much the same picture on the S&P 500. The weekly and monthly are down, and we're over the 50 line, but it looks like it's trying to get better, but it really has to clear these lines up here. This target zone right here has to clear that before it really gets into any serious upside momentum. So it's still on the borderline. It's still a trading range with a minus 55, indicating we could see more two-way action. But generally speaking, a lot of the downward momentum is being taken out of the market simply because we moved over the 50 line here, which is a good sign. Now the NASDAQ is a little bit different picture. You can see clearly we have not just our over the 50 line plus 75 indicating a trend, but the only one missing here, the party, is the weekly, which could kick in, but means we have to go over this area here. I don't think that's going to happen today. I think it'll be a long shot. Maybe next week we'll see this market sort of maybe grouped together a little bit over the 5,050 area and really sort of regroup to go higher. But the trend longer term remains positive in the NASDAQ. Remember, gold has been 100 minus 100. The trend's clearly down. This is not a good sign here below 1,150. That's going to indicate a new low close if we close there. Again, the trend is clearly down, and there's not a lot of enthusiasm to step in front of it. I thought we'd see some support down at these levels. We may still see that, but quite frankly, you're trying to catch a falling knife at this time. It's not something we would recommend. You want to see some sort of turnaround, and you haven't seen that. You're still below the parabolic. All of our trade triangles are down. You've got a score of minus 100. The trend is clearly down in this precious metal, or I should say once precious metal. The euro is still trying to fight to find a place, level it wants to be at, but generally speaking, you've got minus 100. All the trends are down. You can see all three of them are down. Plus you've got the minus 100 score indicating the trend is down. We're just about to go below the parabolic line, and we are below the 50 line. So a lot of things are indicating that the euro wants to go lower vis-a-vis the dollar. I would say if you're not in a position right now, it may be a very good short to be right now short the euro, long dollars. Crude oil tried to get something going this morning, really didn't happen, it's fallen back, but generally speaking, it is above the parabolic, indicating maybe we put in a slight low here. And what I could see potentially happening here is the fact that we do have a potential double bottom right here and a pivot point, but that's really sort of stretching it to a very fine point. You still have the weekly down, which is where we take the trend from, and the monthly is down also. Only the daily is up, indicating a minus 85, slight downward trend. But again, it's a trading range in my opinion right now. You should be out of the market. If we have a conflict with the weekly and the daily, you're out of the market. You need to see this triangle go red or this one go green, but not to be in this conflict like that, indicating a sidelines position. Well, that about does it for today. Obviously, I hope you caught the Celgene stock we talked about and some of the other ones we're looking at. Amazon's doing very, very well. It's a big day today. and I think that stock can still go higher. I'm Adam Hewison for Market Club. Thank you so much for watching this video, and we'll be back very soon.